this is Jamin Kirkwood from Secure Financial Management with your July 2015 Educational Economic Update. In this month's video, we'll talk about some of the major economic events from last month and give you some insight into what they might mean for you. Please stay tuned at the end for a required disclosure statement. Greece was again at the center of headlines last month as the country edged ever closer to financial meltdown. On the domestic side, second quarter earnings season kicked off, giving investors a clearer picture of how companies did last quarter. In mid-July, Greek and European negotiators were finally able to hammer out a compromise that keeps Greece in the Eurozone while still instituting some of the reforms creditors wanted to see. However, the wheels seem to be coming off the deal already, as both sides ultimately want very different things. Greeks want austerity relief and debt restructuring, while creditors want further reforms. Will the deal lead to a final resolution on Greece's issues? We're not so sure at this point. Earnings season came into focus in July, and the picture so far is pretty average. Out of 263 S&P 500 companies, earnings were up just 3.2% year over year. Now, the real culprit here is the energy sector, which is dragging down overall earnings growth because of such low oil prices. Taking energy companies out, analysts expect overall S&P 500 earnings to be up 5.3% year over year. These results tell us that a lot of the weakness companies experienced in the first quarter stayed with them to the second quarter. Now, will US firms be able to shake off the doldrums in the second half of the year? It's hard to say. With the European and Chinese economies still struggling with growth, the demand picture doesn't look so good. Now, domestically, the economic picture is doing reasonably well. Hiring is increasing steadily and wage growth is edging upward. But consumer sentiment in July did drop, probably around concerns related to Greece and China. The Federal Reserve met again in July, and though no interest rate changes were announced, the central bank reiterated its intention to raise rates this year. The Fed cited improvement in the job market in support of its intentions, though future decisions will be contingent on further job gains. Are expectations baked into stock and bond markets? We don't know for sure, but the Fed has been telegraphing its rates play for months now, so we can hope that markets won't overreact when rates finally start to go up. How fast will interest rates go up when they do? We don't know how fast the Fed will start raising rates, but everything they've said thus far tells us they're moving cautiously, and we'll keep an eye on the data as they go. Now, looking ahead, investors will be watching for earnings surprises to gauge expectations for the third quarter. The economic picture is pretty mixed right now, so investors will be keeping a close eye on the data in weeks to come. As will we. We'll always be keeping a close eye on the markets and we'll update you as necessary. That's it for the July Educational Economic Update. If you have any questions or concerns about what we've discussed, please give our office a call at the number below. And before I go, I want to give you a quick reminder about our upcoming Retirement Roadmap Workshop to be held Thursday, August 20th at Perico's on I-10. We'll be beginning with hors d'oeuvres and drinks at 5:30. The presentation will commence at 6. Once again, this is Jamin Kirkwood with Secure Financial Management signing off for the month of July 2015. Please remember that nothing we talk about here is a recommendation. If you would like to discuss your personal financial situation, please give us a call at 210-428-6250. We'd be happy to sit down with you face-to-face and discuss your situation. While we believe the information in this report is reliable, we cannot guarantee its accuracy. Opinions expressed are subject to change without notice and are not intended as investment advice or a solicitation for the purchase or sale of any security. Please consult your financial professional before making any investment decisions.